Hey, how's it going, guys? Thank you for watching. My name is Gavin. I'm a real estate agent, real estate investor, and today we're going to talk about reverse mortgages. So reverse mortgage is a loan for homeowners that are 62 or older and have equity in their home. If you have a mortgage on the home, you can use some portion of the reverse mortgage money to pay off the existing mortgage, and then the rest of the money you can actually do with it whatever you like. While you still have to continue to make your property tax payments and your homeowner's insurance payments, you will no longer have any more monthly payments associated with your mortgage, and that's the reason why a lot of people are interested or curious about reverse mortgages. The only time you'll have to make a payment is if you move out, you sell the home, or if you pass away. So what are the qualifications for a reverse mortgage? They're pretty simple. Number one, you've got to be 62 years or older. Number two, you have to be using the home as your primary residence. Number three, you have to have equity in the home. And number four, if you're using one of the government insured reverse mortgages, such as a HECM, you have to take the course and go through counseling just to make sure that you're financially ready for that particular loan product. So what are the pros and what are the cons? This is usually what most people are wondering. Saying, hey, I have this equity in my house, I can get all of it, but sometimes they don't fully appreciate and understand the downsides and the major drawbacks of a reverse mortgage. And today we're gonna get into all of those, but let's start with the good news. What are the pros? So the pros of a reverse mortgage: you can eliminate your monthly payment. Sometimes as you get a little bit older, you might be retired, you might have had a change of situation, the monthly payment can become a little bit stressful. So the reverse mortgage is going to completely eliminate that monthly mortgage payment for you, as it is going to refinance out your current mortgage. The only thing that you have to still worry about is your property taxes and your homeowner's insurance, and you got to make sure you pay that. Number two, you can consolidate your debt. If you have a bunch of debt, credit card debt, car loans, getting that reverse mortgage money, you can use that to pay off all of your debts and be in a better financial situation. Number three, you can make home improvements. You are allowed to take that reverse mortgage money and fix up your home, new kitchens, new baths, which is what I would always suggest if you are doing anything as it relates to a refinance with your home, to put the money to good use to raise the property value. Number four, you can use the money to supplement your income. Again, if you're retired or you've had a change in situation or a loss of a spouse, your income might be down from what it used to be. Getting that reverse mortgage money can allow you to live as comfortably as you might have been living in the past. And number five, paying for in-home care. You can use the money from your reverse mortgage to pay for any in-home care that you need. Now, what are some of the cons? While reverse mortgage can be really good tools to put yourself in a better financial situation and have access to money, there are a lot of cons, and they're pretty serious, and I think they should very much be considered before you decide to move forward with a reverse mortgage. So, number one, reverse mortgages often come with higher costs. They include counseling fees and much higher loan costs than most other loan types. Number two, even though you'll no longer have a monthly mortgage payment, if you stop paying your property tax or your homeowner's insurance, you could still lose your home. Number three, the loan could impact your ability to get government-backed programs such as Medicaid and Social Security, so you should definitely reach out to somebody who is equipped to give you those answers, such as a financial advisor, to make sure that you're not getting one thing and foregoing some other things that you may need. Number four, reverse mortgages are very complicated loans. They're very different than most other loan types. And because of that, a lot of times they may be used in financial scams against seniors that put them in very challenging positions where eventually they end up losing their home. So it's really something that you want to consider and look into before you do a reverse mortgage. Number five, and again, this is just my opinion, a lot of times you are removing all of the equity in the house. Most Americans hold large amounts of their net worth in their properties, and a lot of people take a lot of time, energy to buy properties and a lot of time to take care of them and pay them off over 30-year periods. Most of the situations I see when clients come to me, let's say they've had a parent pass away and they say, hey, Gavin, can you help me sell the house? You know, my mom, she took out a reverse mortgage. Most of the time, there is barely no equity left, if any, to pass on to your heirs. And we know that transfers of wealth occur a lot of times with real estate. And so if you are focused on estate planning and want to leave your heirs with substantial money that then they can then take and invest and do things with their life, a reverse mortgage is something that can be very risky because oftentimes it's going to erode all of the equity in the home. All right, now, we went through all the pros, we went through all the cons. Probably or possibly a little bit confused and still a little bit uncertain on what to do. So I'm going to give you 5 options that are alternatives to a reverse mortgage, and maybe you can consider them and they might be great options for you. So number one, some people don't like to hear this, but sell or downsize. So some of the best things that you can do if you're in a position where you can't really maintain a house, you can't handle the bills, or you just need excess cash, especially if you own the house outright, sell the property and downsize to a smaller property that costs a lot less, and then you can use the rest of the money that you made on the sale to do whatever you need to do with your life. So that's always the number one suggestion: sell and downsize. And of course, the upsides to downsizing is you got less monthly costs such as AC and water bill, you've got less grass to cut, you've got less stairs to walk up and down, so it can definitely be a plus. Number 2, refinance your current mortgage. If you feel like your current monthly mortgage payment is just a little bit too much to handle, reach out to a lender, refinance your current mortgage, and see if you can get lower monthly payments. Number 3, take out a HELOC, a home equity line of credit. Let's say your house is worth $500,000 and you have no mortgage on it. You can take out a HELOC, for example, of $100,000, and you only get charged interest on that $100,000 when you actually use the money. It's basically a bank account you can tap into, and you'll generally pay a smaller amount of interest on that money than you would in any other scenario. Number 4, apply for a home equity loan. Even if you have a current mortgage in place, if you have equity in your home, you can always get a second mortgage, and you can use that money to make any repairs that you want, pay for in-home care, or whatever else you might have needed the money for, which is why you're considering a reverse mortgage. And number 5, rent out the space to others. So you can either just rent the home completely and separate to, another party, and you can move out maybe to a smaller, more convenient space, or you can just rent out parts of the home, whether that be a basement, bedrooms, whatever you're comfortable with. Benefits to this is that you'll have company, someone to possibly offset some care, maintenance in the house, such as cutting grass, but of course, be careful whoever you're renting the house to, and always look out for your safety and make sure they're not only a safe person to live with, but they're also financially qualified, and it'll be a good decision for you to rent out to them. So you've reached the end of the video, so hopefully you have a better idea on what to do, whether it be sell the home, refinance, or do a reverse mortgage, or just keep the home. Hopefully this video was able to clarify any questions you had and answer them for you well. If you still have questions, feel free to send us a text, email, or give us a call, or you can also just drop a comment down below and I'll respond to you as soon as I see it. And now if you're looking for resources on how to do a refinance or how to do a reverse mortgage, reach out to us as well. We have some very good people that we can refer you to that would be more than happy to help with either one. And if you're looking to sell the house, reach out to us. We'd be more than happy to give you a market analysis, give you an idea on what your house is worth, and guide you through the process to get it sold. Take care. See you in the next video.